Welcome to TradeTheMBA.com. This is John. This report is for May the 4th. Well, we had a little bit of excitement the other day. It was a pretty significant decline. Certainly fit within our 34 ATR, which is just the average true range, how much a bar moves in a given day. And this certainly lived up to the bill of what we've been seeing. We were within this declining shakeout, so the expectation was for potential continued weakness here. We still had a little bit of positives with the rising steel. That hasn't changed, so you still have some positive benefits within this otherwise weak situation. We've been in a distribution starting yesterday before we were above the green line, and that kind of gave a little support, but here we've seen that there was a significant amount of selling. This coincides with what we had right back over here, and all we've done, and that was a dip below the red line down here on the extreme histogram, and what that calls for is what usually a testing of the lows, and it's exactly what we got. But again, beautiful. We're having the little Morganacci lines there where the 23%, 26.12 and a quarter. It's another one of those where you're below. Hey, you want to be short biased, you move back above it, long biased, and turned it to be a nice pivot range. It was pretty clear intraday when it started to turn, and propelled from there. Here we have the NQ, still stronger because it stayed above this 23% and actually closed above its 38. So, and that's because it's also rising. So that's a little bit of a bullish configuration there. Euro kind of stabilized a bit, but still in heavy. Look at that, all those magenta lines. So any pop even here is still going to visit the lows. So it's not something to get all that excited about. And Treasury's still way elevated compared to what they should be in general, given what we're seeing from a rate standpoint. Oil maintaining itself at this plateaued level, which is not horrible. It's not super spectacular, but it just means that you're going to have some pretty decent growth as far as expansion from the oil industry, and that usually, as long as it doesn't get excessive, isn't going to be overly impacting from inflation. We already had the big increase, so those prices are pretty much baked into the situation at this particular point. We know that it's going to have its modest inflationary effect in the second half. So that will be something I'm sure that the Fed is going to weigh, because when you have that inflation factor, it's going to put pressure on rates regardless of whether they want it to or not, just from a public credit standpoint. And gold, finishing on its lows, but still moving up ever so slightly. It's still kind of pathetically weak. So here's the broader day. We go all the way back to the open here, and let me just go ahead and pump up the size of our chart so it makes it easier to see for everyone. So we start over here in the back corner. We ended up with these white candles, which is really the representation of the steel going above 13.5. It's a warning that you don't really have a bullish setup until you get that cyan dipping below 6 1/4. That happened right here. Sure, it was short-lived. We ended up with the steel crossing below. It was right here, which happened to be exactly the peak, made for a perfect short, and we came back to the bottom where we ended up in gold. But you end up in gold in this little flat area. Anything you're expecting, this is where I mark it with the little purple line here, because it matches the purple of the extreme. It lets you know that you're likely to retest those lows. So the best you're hoping for in this case is maybe a move to the 23%, or that catches a little bit more than that, but you've got to be cautious. And again, it still crosses below cyan. Even before that, green had crossed below red. It didn't last but a few bars, and sure enough, retested right back down at that bottom. We ended up with a secondary pop. Now, this would be the one that's a little more attractive, but in a weird case here where we ended up with the buy setup, and it's interesting because you see these little bluish dots here. Let me enlarge that and get a better view. This is a show me study that I was doing that would indicate where you have everything doing what you want, where orange is falling, green is rising, red is rising, steel is rising, and cyan falling, and it puts the little dot to let you know, hey, you've got everything you could possibly want happening at this moment. But the power of being below the 23%, pretty decent downtrend, Gave it enough to get up there to the 38 zone, but you can see it spidered immediately with the cyan and green right there, and that led to the next short setup, which was quite nice, and then it continued to expand. As we got over here, we had the complete breakdown, and you were just really struggling with steel kept crossing below, and then you were getting into what we call that continuation zone, where you have cyan and orange in between. In this particular case, steel started to shoot up there, but you had such great separation of red and green going straight down until you got to the super oversold, which normally is a decent reversal, except for your big dips below the red line. So you would wait for the secondary one, which should be a little higher. And no, it wasn't higher. You ended up with the 13 plus, and it ended up giving a tiny bicycle that did absolutely zero. That just shows you how big the distribution on this was. And at this point, you were expecting a revisit of the lows anyway, and that's exactly what you got. So it just revisited them right there. And then this one ended up a little bit later. You ended up with the dip down here. Didn't produce a whole lot because it really would not have been super attractive other than where the dot is showing here, where you had everything going exactly in your direction. But given the amount of weakness that we were looking at, this secondary setup, when we started to get the build where you're looking at higher red and you're also getting very close to positive extreme. Here, you'll notice all these histograms for the shakeout. Even if you're just following basic shakeout here, this was pretty clean. That's where this red line is marked, because it was, you had an increase in the shakeout. This was the first lower bar. So even if you didn't worry about the setup there, if you were just following that, that was the beginning of very nice downturn. But at this particular point, you've got shakeout near positive zero, and you're at a higher DOC reading. My view, once you hit this dip, you were looking for your first orange down, which was right here at 2601, and that took it for a nice move, quite a bit. You ended up with a little DOC spread there, but you didn't get the dip of the red until right about here. But anywhere along there, it was a decent short. The problem with that, it came down to the 50% and literally hit the 50% and started an immediate turnaround. You had the bullish snake developed right there, and that was a nice long, because that just took off and went. Nothing you can complain about that with. What's also interesting too is when we look at these from a short setup, it's not until you get the green below and the orange above the 13.5 that you can even begin to think about shorting that setup. The secondary one started right about here, but this was really the primary. You still would take some heat with it. So even at 24, it went all the way up to 28 and a quarter. So almost 4 points of heat before it started to decay. Now that's because you have that cyan well under red, and that is, typically always along problematically. It started to really break down here once you get the red starting to move lower, and that's usually the key for them. Particularly red that drops below zero tends to be the strongest. And then we ended up with kind of a sideways malaise up. So it was still bullish because you ended up with more cyan below red for the most part. But we started once you start spiking all the time with the orange, you know that there's some building algo activity as far as distribution goes and that. So I'm always looking for when the steel dips below cyan, and particularly then you have red dropping below, moving lower, and then as soon as green dips below, I usually jump on those because even if you're at the highs, you tend to get some downdraft, even if it's modest. This was a pretty decent short, and it took us all the way to this point here where we had dipped below the red line. So even on a pop, I was looking to short those pops for the return back, and it happened to do it very quickly on some of these moves. And some of these are about 4 or 5 points, so it's not like these were small bars, and that gives opportunities to be able to just trade some of the bullish to bearish inflections within it. But once that filled back to the lows, you didn't have any expectation one way or another where it was going to go. And with rising Morganacci lines here, you had to expect that things were going to stay fairly decent, and they kind of did all the way through into the end. It was just sort of choppy with the slight bullish tint to it, and then we ended with a DOC spread right before market close there, boom, and we've just been trading sideways ever since. Right now, slightly in a bearish snake, so to speak. It's sort of a mixed bag. This is an interesting one because whenever you see the orange above that steel, you're thinking short, but you got to keep in mind you're really also looking for that green to be under red. If you can't get that, at least that red is falling in, particularly if it's breaking into a lower zone. Sometimes you're not going to get all of them, and you can make a calculated risk, but you need to understand when you do that and everything's not going exactly in the same alignment or direction, what you often get is this choppiness. You don't get a consistent flow. And there's nothing wrong with taking those. They're just not as high a probability, and you tend to take a little bit of pressure against you. And that's just something you have to weigh when you're looking at if you really need to be in the action or you can sit back and wait for the best setups. Because they eventually come. You just want to be prepared for them when they do. And a lot of times they'll start out very small. You know, it'll be just this little right here break of the orange above steel, and cyan is above red, and you're very close to the crossover, so it's like an anticipation that you're going to get it, and you would have seen it because right in here it actually happened as it was moving to the highs. So it would have given another opportunity to say, oh, hey, risk reward. I've got what looks like a bearish snake developing beautifully. Should I go ahead and just enter up here just shy of the highs with a stop just above? And that becomes very effective. And you can do that an awful lot during the day. You'll see a lot of these setups develop. And they become interesting plays and very effective. So keep that in mind. As always, though, I will put up charts, but I'm going to be working on some of these various setups and definitions, and just doing them as a show me like that just makes it easy to identify the best potential ones so that we can then convert that into the practical peak bar applications. So that's what's underway and been in the works here. So all good. As always, trade well. Talk to you later.